Good morning, Warriors. Brock, how are you? Pete, don't worry about it. Hello, Colin. Kevin, how are you? Shahab, Surinder, Mark, buy dips. Okay, I have something to say about that. So looking at oil here on a very short-term basis here for turnaround Tuesday scalp. Okay, this is just my own idea. Hello, Monica. Just shorting the crude up here, risking about $1, looking for, take partials here around 37.20, 30. Then move stops to BE and maybe get a little bit more out of it down to 620. This is not a position trade. Okay. I want to talk about a few things here. Talked about favoring gold longs over silver yesterday. This is the way gold looks to me. I think we're going to rally up towards this speed line or a wedge line. Comes in around 1788 for a third drive. So, still $60 away. That is off the table, taking out yesterday's lows were 1703. Okay. So I still think there's a chance that this is an incomplete pattern and we complete it. And I want to talk about something that I brought up about, I don't know, a month ago or so in the S&Ps, that perhaps just consider this. Here's the low of the move. It was March 23rd. Anyone know what March 23rd was? Down there? Any guesses? The significance of that day? Was the spring equinox. Exactly on that day, little Gantt stuff where you could get inflection points going into the end of one and the beginning of another season. And what do we have? I believe in 5 days from now. What do we have? That's right, the summer solstice, right? So meaning that spring is over. So this was spring, not a bad spring back in the S&Ps, right? No, maybe that it's the longest day. But anyway, look at how, the market has stayed intact during the whole spring season. And possibly we're going to get some market peaks and turning points. And you look at S&Ps have gone up. Gold has gone up. Oil has gone up. A lot of things have gone up. So longest day. All right. So keep an eye on that day for some moves that have been occurring through the whole season to be terminating and potentially reversing. So it doesn't mean that we're going to make a new high for the move over here, but maybe we get a secondary top. And, a lot of people were talking about this island top in the S&Ps. I have it here somewhere. Yeah, here. So this island's going to be it's going to be tested here. It's okay for it to eat into the gap, but if it fills the gap, and you have the gap on the spiders, not the S&Ps, because you have the 24-hour nature of S&Ps now on the CFDs. But the low of the day was 318.20, and it doesn't translate exactly with SPX futures, but watch this. If it just fills part of the gap and comes off, then you have something. 99% filled, not always. You have breakaway gaps. I could show you some gaps that have not been filled for years, and if you're trading it looking for the gap fill, you went broke. And yeah, years. Let me see. I know a lot of this isn't going to show it, but there are gaps that can last for quite a long time. In fact, if you go to the euro, and it's probably not going to show up on the weekly. But if you go back to this gap, this was a breakaway gap on Macron's election. If you were looking for it to fill the gap, first of all, you went broke. Then you had to wait a couple years for it finally to be filled. See that? So that took a couple years to fill, and a pretty good bankroll. So don't buy that hype that they're always filled right away, because there are different types of gaps. All right, they're breakaway gaps. That was a breakaway gap, broke away from a range. So if you want to read about different types of gaps, I learned about it from Edwards and McGee, technical analysis of stock trends. There's, I think, about 4 different types of gaps, and so it's not a guarantee that the spider. Okay, just we're having some tech problems with YouTube. All right, so that's really what I wanted to talk to you about. It's very important that the dollar digs in. Yeah, they're right in here. All right, so we had this initial rally, and we have a nice little pullback here, and we're starting to head up. And the market's in a position where euro's weaker than cable, so very important levels for the dollar. If you want to be able to call this a bottom, we need another high. 97.50 is a big area, and really I don't think you can really call the dollar bottom until we close back above 98.5, 98. See this flat bottom, moving averages converging. So, it's possible we could rally back to these levels here. So one step at a time, maybe 1, 2, 3, or A, B, C, but you could do it risking the low. Thank you, Stel. Okay, anything else I really wanted to talk about? I think that's it. We'll see. I was getting convinced that we were going to see new lows in 10-year and 30-year, but starting to head back up again with S&P strength. Anyway, I think a lot of things are setting up for the end of next week, early the week after, with the end of spring and the beginning of summer, the long, hot summer with unrest in the streets, coronavirus in the air, and an election coming up, and that's going to start playing in. I mean, a lot of the polls are starting to say that Biden has a pretty good lead. So we'll see if the market's going to be able to accept that. He's pretty moderate compared to Bernie Sanders. Although all the people that complain about what Bernie Sanders wanted to do and all the trillions of dollars that he was going to spend for social programs, we ended up doing it anyway. We even pulled
Bernie Sanders, I've said it before, Bernie Sanders won the elections, no matter that he's not even a candidate.
Yeah. And Andrew Yang won the election too, because he was talking about sending everyone $1,000 a month, and I never got mine. But
that's why he probably lost. He promised, very little.
Oh yeah, he didn't offer enough. 1,200. Yeah. If he would have offered 1,200 a month to everyone, universal income, he would have been in the race. So, anyway, interesting times we live in. Beijing now has the European strain, and how about that? So, the mutations are traveling. I don't know how they're getting there. Maybe Marco Polo brought it into China. Anyway, that's what I have for today, and very interesting setups that are going on right here, and we'll see what happens going into the end of the week. And Blake, how are you today, buddy? And what are you thinking about this?
I'm awake. How are you doing?
Yes, barely. I think you were looking for this pullback in euros so that you could be a buyer on a break around 11.5 or so. Looks like you might get it.
Yeah, maybe. I mean, there's some setups out there. I wanted to talk a little bit about, you were talking about the election, and one of the guys that I work with brought up a pretty good point of, sorry, it's like I don't yawn until I start speaking, and then all of a sudden you start yawning. You know what I mean? Um, uh, as far as the election goes, one of the risks, and this is a good risk too, if you think about it. One of the risks that Biden has right now, having such a big lead over Trump at this moment, what do you think is going to happen to the voters?
Yeah,
it's that mentality that happened. It's the same thing that happened with
Hillary.
Clinton. Yeah, I mean, people go, well, I didn't really want to vote for her anyway, and since she's leading in the polls, I'm just not going to vote. Right.
And that may be even more prevalent with the virus out there. People have to go.
Oh yeah, I mean, you gotta
point.
Biden's got a good healthy lead, and people are like, well, I don't want to vote for Trump, and I'm not really necessarily a Biden fan, but I would vote for him anyway just to vote Trump out. Yeah, there's a virus, so I don't really want to get out. So I'll just let everybody else vote, and then you have lack of voter, participation.
Yeah.
And one thing that I know for sure is that the Trump supporters, they're going to get out and vote. You know what I mean? So
yeah, they don't even wear masks. I called a friend of mine, Blake, in Chicago. I said, Danny, are you, wearing a mask when you go out and worried about it at all? He said, no, I'm a Republican.
Yeah, it's pretty politicized over here too, where I live, and I see that as pretty common.
It's weird.
Mask means you're a Democrat. No mask means you're a Republican. Very, as silly as it sounds.
Yeah.
That's I would say, the prevalent attitude where I live, in a red, could go blue state, but we're generally speaking a red state. So that is pretty much the attitude here too, and it's interesting, to
politicize a disease,
politicize wearing a mask. I'm like, you should probably be doing it just to be safe. But anyway, what do I know? Okay, so let's talk about the markets here. And you were talking about the euro dollar, and we have a head and shoulder pattern developing. Actually, the euro's been under pressure a lot of the day. It's been I would say, since, Europe's been open, we've been near the lows of the session, and we might be setting up a head and shoulder pattern. It's possible. I know it's pretty obvious at the moment. Everybody's probably looking at the exact same thing, going, oh, look, head and shoulder pattern. But I try not to get too excited about these, but it's worth noting. And I do have to point out that the 38% retracement, I feel, is very important at this point. So, while we're above the 112, 112.15 level, whatever, 112.10, it's going to be, pretty important. Wow, look at equities. North America comes in and equities just rip. That just happens every day, like without fail. So here's the S&P. We're up near our highs, and matter of fact, we are, we were challenging the 618 retracement, and stocks are ripping now. You can see we're, pushing right up into new highs for the session. So, and this is, you can see this has been the 618, little divergent on relative strength, but doesn't matter. Like I said, we're a North American trade, so everybody comes in and starts buying. One of the reasons why the stock market rallied last night, if you were looking at this pop that we saw in the S&P, there was a headline that Trump was he's mulling over $1 trillion infrastructure spend bill, and that pushed the equity markets into new highs overnight. So here we are revisiting those highs. Here's the cable. Cable's not doing a whole lot. The Aussie, you know, it's interesting. The Aussie rallied and squeezed past the 618 last night, and it was just squeezing higher. And now it's, you know, it's not following risk, which I think we need to pay attention to, because if you're sitting here, you know, you're sitting here looking at equities at highs, yet the Aussie dollar is failing to move up. I think it's worth noting. So, you know, can we rally from current levels? Yeah, I think so. But if we can't take out new highs here, you have to realize that this is a 618 retracement. So if, like, let's say we pause at, you know, 95 or 69, excuse me, 50 or something like that, then, you know, it's worth noting that we're coming up into some pretty key resistance. All right. But, you know, the Aussie's been strong and it's been holding up well the last 48 hours or so. And you can see equities are just plowing higher. It's so ridiculous. It is just so silly. Look at the stock market. Here's the NASDAQ, pushing higher. Here's the Dow. I'm very, if you can't tell, I'm extremely frustrated that this market just, you know, we were literally going limit down just a couple of days ago, and then here we are bouncing back. It's like after coming out of an ascending wedge. So you can see the ascending wedge here, you know.
Yeah.
So
Steve has a new trading system I see on Skype for a reversal.
what's that?
Oh, you have to read it.
You have to read it.
That's pretty funny. Yeah, that is funny.
You use that system too, bro?
I'm gonna pass it over to Steve just in a moment. He can tell all the listeners what his new trading strategy is.
Okay.
The one thing I got to point out on the dollar Mexican peso is that we are hovering above that. This is the 2250, or excuse me, 22 level. This is the breakout point. Okay, it was the breakout point. We came down and we stalled here at 22 for, you know, days. We finally broke down, then we came back. As soon as we ripped past the 22 level, it just, you know, squeezed everybody, right? Now here we are retesting that 22 level. And I think it's important to watch how we respond at this level. And if we can hold above 22, that might be signaling that that there's a little bit more or it might be signaling that risk aversion might actually come back in, as long as we're holding above 22. I think if we slump below 22, we push below 22, then that'll just further confirm that stocks are, you know, going to continue to move higher, which they're already moving higher anyway as it is. So, but Steve, let's hear what your new trading strategy is.
Buy the dip.
What's that?
Buy the dip.
Buy the dip. Yeah, there you go. Buy
Any dip you find, no matter what.
Any dip, you buy the dip, because that's just what happens with this market.
Yeah, the more illogical it is, the better it is.
Right. So anyway, what's going on there, Steve?
Yeah, you know, everything's under control, mate. How have you been?
Oh, just wonderful. I'm so irritated at this market right now. I don't even know what to. I don't.
Yeah, as you, I don't know if you saw, because you were speaking. I just put a new pattern in play on. I mean, you know, I'll have to end up becoming, you know, a day trader with this, you know, type of stupid market. You remember people were asking me yesterday why I closed my pattern in play that was short. You know, that's the reason. You can see it now.
Right.
You know, because this market doesn't want to give up to logic. So to be honest, you know, I was fairly sure that, you know, the chances were high for another squeeze. You know, so but I now feel comfortable again that the risk reward is again in favor of short positions in the short term. So let's see how this is going to work out.
Yeah, we'll see. We'll see. I'm sitting here just trying to look at the S&P and see if we can hold above this or hold below the 618, and we were doing it overnight, and now we've just pushed in the new highs. Very divergent relative strength, but it doesn't really matter, right? The markets just continue to press higher. So,
Of course it doesn't.
So anyway, yeah, it is. I guess it is what it is. What's interesting is gold and silver continue to hold up very well too. And I'm actually quite surprised that the precious metal complex is as strong as it is. I would have thought that with equity markets being under some pressure, we would have seen gold and silver really buckle under pressure, but we just aren't seeing that now, right?
I think the fundamentals in the macro environment are such that if gold and silver can't thrive under this environment, I don't know under what environment they can.
Well, yeah, I mean, but you would think that that as people are and traders are plowing money into equities, that they would take their money out of such the strong positioning that we've had in gold, that you'd be taking some profits there and moving them into equities, but that hasn't been the case at all.
Blake, I think it's a very common misconception between people in finance. So it's not like something that is at least that's my personal point of view. Many people traditionally viewed gold, for example. I'm going to focus more on gold because traditionally it's more of a hedge or whatever. A lot of people are focusing on gold having, among other things, an ability to hedge, for example, stocks. In my opinion, that is more or less a misconception, because if you think about it, what gold is best to hedge against is bonds. Because think about it, inflation is beneficial for stocks traditionally. What isn't it beneficial for, though? Bonds. Because what is a bond? Bond is a promise to repay in the future on the currency, right? On whatever currency it is. So US bonds is a promise to pay US dollars in the future. So if inflation or inflation expectations erodes that value very quickly. So I think that gold is more of a hedge against bonds and bond exposure, and of course cash exposure. So if you want to be keeping your money in dollars, than anything else.
Yeah, that's a good point. It really is a good point. Well, as far as the dollar goes, and let's talk a little bit about the dollar here. The euro's under a little bit of pressure, but it is holding up pretty well. I really want to be a buyer of euros. I had always thought that 111.50 is going to be the level where we can get long, and I'm really hoping that everybody's looking at this head and shoulder pattern and it starts to break down, but falls short and does one of these where we get down to 111.50 and bounces, as everybody gets aggressively short the euro. I'm really hoping we see some downside in the euro here in the coming days, but it's been holding up pretty well. And I think a lot of that has to do with, the equity markets doing well as well. It's keeping the bid in the euro and in the Aussie. So we'll see if that can continue, I guess, going into the remainder of the week. But overall, Steve, the FX market's kind of benign right now.
Yeah, as I was saying since some time ago, unfortunately, because that's not a good thing for us, it's a bad thing for us. With all this interference and manipulation in the markets, they've transformed almost all assets in binary assets, like risk on, risk off. So you see that everything is moving in tandem. So even currencies, they go in two baskets. Is this risk on or risk off? And of course, that's in currencies, that's not like so absolute, but you can still see the huge effect of risk on, risk off. So the unfortunate thing about it is, in the vast majority of the cases, if you don't get the right side of risk on, risk off, even if you're trading, other assets, you're going to be losing money. Or if you have the right side of the market, you're going to be making money even through FX.
Right. It's a great point.
No differentiation anymore, Steve.
More or
It's
less.
hard.
Yeah.
It's binary. You're right. Everything goes up and down together.
Yeah. Well, guys, I'm going to pass it over to you. I just got word that I thought I had an event to do this Saturday, but it's actually next Saturday when I'm supposed to be traveling, and I just got word about that. So, I know I got to go deal with it. All right.
Is that a good or bad thing?
If I sound super frustrated, it's because I am. I'm just hoping we get some follow through one direction or the other. You guys, good luck today, and I'm going to pass it over to you.
You too, Blake.
Thank you, mate.
Thank you, Blake.
Thanks, guys.
Hello, everybody. How are you doing?
Hey, Stel.
Hey, Stel.
Good. We have retail sales in 3 minutes, but we have a little bit of time before that. So
I need some underwear.
you need some underwear. I don't
How
have
can I
any.
help?
I'm
How can I
commando.
help?
I go commando, man.
I don't do my laundry until I run out of them. So if I just go out and buy more, I'd never have to do the laundry.
You just use them once and throw them away, right?
Yeah, it reminds me when I was a student, my mother would come to London once every 3 months. She would cook like 55 dishes, put them in the huge freezer we had, and we just take one after the other.
Nice.
So we didn't have to cook. That was nice.
Yeah.
So equities. The Fed basically said today, like everybody here, I think, knows now that they're going to be buying corporate bonds. And what does that mean? You're a corporate, you go out, you issue a bond, very low yield, basically almost nothing. The Fed buys it, gives you money, and then you can do some buybacks. So I think the market realizes that this is yet more cash going into the system. And
and the more spectacular blowout when that day comes, because they keep throwing leverage to the system more and more, and every time they have to face any problems, the solution is liquidity and leverage.
Yeah.
So unfortunately, they make the day of reckoning even more impressive. No idea when that's going to be, but it's going to be impressive.
The main problem faced everywhere at the moment is debt. Too much debt, too low yield.
So the solution is obviously more debt.
Yeah. Imagine if 10-year US goes to 2%, which is really not. I mean, it should go back to 2, 3, 4, 5%. Imagine if that happens. It's going to be mayhem.
That's not going to happen, man. Because when it starts moving, it's not going to stop even momentarily at 2 or 3 or 4 or 5%.
Yeah. But anyway, the question is now the Fed is going to be directly or indirectly buying everything, and they've ruined every single market known to man, pretty much. So it's a very difficult situation. I still think that eventually fundamentals at some point have to catch up with, I want to say markets, but really I'm going to say equities, because equities are not really markets anymore. And you have things like, North South Korea today, and India and China, and things are brewing everywhere, and there is really not a single good thing that I can read on any particular day over the past few months, and still equities are going higher. So you have to go with it. I was, for people who have been in on this webinar and ForexAnalytix, I was short a little bit of S&Ps, not a lot, at 30.50 and then 31.15. I cut that yesterday as soon as the Fed came out saying we're buying more and more. So it was like plus 20 points or something like that. It was not a lot, but I'm looking again to sell, not yet, but I'm going to be playing this on the short side. And but really, it's very difficult to go against this. You have to time it well, and you have to be. Personally, I'm going much smaller in size than I used to. But let's look at the numbers, and then we can continue.
Yeah, the new play from the Fed is that good news are okay, and bad news
are even better.
Because in essence they've made very clear that no matter what happens, they're not reversing any more policy.
Yeah. Wow.
Okay,
huge numbers.
Yeah, that's not so surprising given the previous numbers, because it's.
Yeah.
And of course, the market is going to cheer the good numbers, while if the
Yes,
number
yes,
was
yes.
bad, it wouldn't care about it.
Yeah.
It's exactly what I was saying, that, you know, good is great, bad is okay, it's fine, because don't worry, they have our back.
Well, you know, I said yesterday on this webinar, I think we're going to continue to see some good numbers going into
Of
the
course.
next few days, because, you know,
In
May numbers.
comparison to complete shutdown numbers,
Yeah,
yeah, of course.
and not on, yeah, exactly. Not only that, but remember, we started to open up, so we're going to see a couple of weeks of good numbers. But as I'm reading, I'm obviously not there, but I'm reading in many places of the world, they're going to start perhaps lockdown again or controlling things. So I think it's going to be uneven, even though the market thinks, yeah, everything's going to be back to perfect. And Trump tweeted himself yesterday, oh, you know, I still believe a V-shaped recovery. It's coming. Everything's great. You know, buy everything. So it is a frustrating market. As I said before, I'm not short at the moment, but I will be looking to go short at some point. Yeah, so this is interesting. You know, equities are flying, metals are getting sold, but I thought when things were really bad, metals got sold, right? Remember in March? But anyway,
Yeah.
it's okay. You know, the market does what the market wants to do. And so what else did we have? We had
Here is gold still consolidating, but
yes,
you know, regardless, I mean, still very near the highs, and I still don't see anything really bearish in this price action. I mean, we need to do a lot more, you know, to start, you know, really talking about a, you know, breakdown or whatever.
you have to get below that zone in 16, what was it, 40 or something like that, to really start looking at
Yeah,
potentially lower.
16, yeah, at least 1670, which is the previous low, and it was a low back there as well. So 1670, in my opinion, is the line in the sand. Above it, I think it's quite dangerous, you know, being, you know, overly bearish.
Yeah.
Now we're seeing, actually, that's quite interesting. Now we're seeing the DXY rebound together with risk assets. Let's see for how many hours that lasts. I don't think it's going to be for much time.
Yeah, it's been inversely correlated for a while now, so that's very odd.
Yeah.
Let's see. But yeah, like you said, I think gold is consolidating quite well. It's trading well given the these moves, and it's funny. You know, if you look at the daily chart of gold over the past weeks, it's been it's been going really steady. You know, compared to what the other markets are doing. So I think that's a sign of consolidation, waiting for.
Yeah, yesterday at some point it was looking like it would be a really bad day. It was looking like a breakdown, and you know, by the end of the day, we had retraced most of the losses, and you know, we ended up with a pin bar. So you know, nothing to see here yet. And as I said, definitely nothing bearish yet. I mean, clearly, you know, there is an upside momentum loss, but you know, from upside momentum loss to bearish reversal, sometimes there's a big distance between them.
Yeah. And, you know, remember the big picture. If the Fed is buying bonds, corporate bonds, throwing out cash to people's accounts and everything, you want to have real assets. And, you know, we've been saying this for a while now. So it's not surprising that gold is holding up well. I can't rule out a leg lower before we go higher. Of course not. But in fact, I would love one so that I can get some more longs in. But I think that
I would love it as well to get some silver, because silver is one thing I don't have.
I have enough silver. I need to get some more gold.
Okay, I can trade you off some.
So other stuff we had today, data out of the UK, average earnings index, which is quite important, fell quite a bit. It's gone down to 1% year on year. And of course, inflation is also falling in line. So it's still higher than inflation, but you know, there's a positive gap, which is narrowing now. Unemployment rate dropped, same way that the US unemployment rate and Eurozone unemployment rate dropped during this crisis. And we had some German and European ZEW economic sentiment numbers, a little bit better than expected, but really nothing major. Also, the Bank of Japan kept rates at minus 0.1% and didn't really give us anything, and nothing really was expected, actually. So they're firmly in negative NIRP territory, and they're controlling the yield curve, and they're doing everything they can, just like any good central bank should, right?
Of course, absolutely.
Apart from that, not much else really. We have a power.
Crude at new highs. So this channel did its magic trick again.
Yes.
Yeah, I mean, imagine how many people have been chopped up here in crude when they thought, you know, crude was going lower, which, you know, we kept warning people that, you know, they should be looking for a big reversal higher. But look at this. I mean, the continuous has gone from 11 to almost 37. So
I think a lot of people
more than tripled.
Yeah, I think a lot of people were looking at the May expiry and all the shenanigans of that and the negative numbers, and they said, okay, this is going to happen in June. So it might have been positioned the same way, which would have been catastrophic. What else? We have Powell testifying on the Joint Economic Committee today. Let's see what he has to say. And
yeah, it's going to be a surprise. I'm wondering.
Well, there's a Q&A session as well, which is good. So I think that's where the
yeah, usually the Q&A to central bankers are, you know, do you think what you're doing is great or magnificent?
Yeah, the question
magnificent.
is great.
Great. Thank you very much.
Yeah.
Next question.
Yes. What can I say? Yeah. So that's pretty much it, data-wise. And what else do we have this week? Let me have a look at this calendar.
So the S&P is intraday back within this ascending wedge, challenging now this horizontal support resistance area at 3150. You know, I don't really care about what's happening here. I would still be very, very careful. I think the risk reward favors at least one more leg to the downside. I know that, you know, people have started going, very optimistic again. Okay, that was it, a 5% sell-off or whatever it was. But I do think that the market is going to produce probably one more leg to the downside. Now, having said that, you know, no need to go through the rest of the indices because the picture is more or less the same. You can see here the DAX, you can see the Nasdaq. Nasdaq overperforming again. I mean, it's, you know, it has retraced a little bit more. So, you know, that is generally the picture here. Blake mentioned it before. If you look at the FX pairs, the Aussie, the Kiwi, we mentioned that actually yesterday. If I go to the daily, if you remember, I mentioned yesterday in the daily that, you know, listen, you know, we have this ascending channel that is holding both in the Aussie USD and the Aussie Yen. I said I don't intend to be long, but from a risk reward perspective, you know, it makes sense why somebody would want to buy, you know, the channel's retest. You know, so far it has worked, but I do believe that we're probably going to see another leg lower here as well. As I said, unfortunately, everything has become one market. So, you know, a risk turns lower, then you're going to see that leg lower as well in the Aussie, in the Kiwi, in the Aussie Yen, in the Kiwi Yen, in crude oil. You know, there might be a few divergences. For example, crude oil has now produced a higher high, while the stock indices have not produced a higher high. But, you know, other than a few divergences here and there, you should expect that the sell-off in equities will produce a pullback, another pullback in crude. Speaking of the crude market, you know, as long as we remain within this steep ascending channel, you know, clearly, you know, the trend remains to the upside. Now we've started seeing RSI divergences initially in the lower time frame charts. It has now started spilling in the daily. You can see it here. We have a higher high while the daily is, you know, some distance away from creating higher high here. Next upside area of resistance is the 50% fib of 38.38. We also have the 161.8% extension of this last leg lower at 39.95. In any case, let me make it very clear. I said many times that the risk reward clearly favored a big rally in crude, but the risk reward is not anymore in favor of being long up here. I think we're much closer to finding a short-term high in crude and seeing some type of a, you know, deeper pullback so we can find, you know, better levels to buy crude again than the opposite, meaning buying up here makes very little sense. Crude has already more than tripled from the lows, and keep in mind that the lows were in April. So we're not talking about like, half a year ago or a year ago or 1.5 years ago. We are talking about 2 months ago. This market has more than tripled in 2 months. So, it can extend somewhat higher, but, I think, if you're looking for an opportunity in crude, it's probably going to be after finding some type of a high, then I would be looking for a pullback towards the 29 level area, and that's where you should be looking for an opportunity to buy, not trying to chase this market after, having missed, a monstrous rally to the upside. So late. Anyhow, gold, silver, we already more or less covered that. Still in a consolidation, so not much to do here. As I said, they're showing momentum loss, and they've also gained quite a lot for them to not be a good opportunity to buy. But on the other hand, given the fundamental backdrop, I wouldn't be selling them in any case. I think just buying pullbacks is the way to go in these markets. Otherwise, just stay on the sidelines, because there is a big chance that you're going to get chopped up. I remind you that people have been trying to sell gold, for example, a little bit after we broke through the 1360 area. People are looking for opportunities to sell it, and despite all that, it has produced a $400 rally, and people were still trying to sell it. So you don't want to be one of those people. Now, let me go back to the 4-hour chart and on the DXY. So, this is what we drew a few days ago, that we might see a pullback in the DXY and another leg higher. This happened in the short term, but even, with the current picture, the current technical picture, that is more or less what I would be expecting from this market. So even if this is a corrective rally, I would expect for it to produce at least one more leg to the upside. So something like that is what I would envision. That's why I also, this is another reason why I'm looking for another sell-off in the stock markets, even if this is just part of a, corrective pullback, and we are to see more madness and, more upside. By the way, the S&P is now at 3151, so quite a nice rally so far. I mean, we are already 2.5% higher on the day on basically no news, because I remind you that the vast majority of this rally came even before we got the retail data. And yesterday's rally from the lows came out without really having anything new. I mean, even the fact that the Fed is going to start buying the bonds is just the initiation of a program, one of the 10 special purpose vehicles that the Fed had already announced and created since a couple of months ago. So that was also not news, right? But this is how this market works. I mean, it's not easy to go against it, because it doesn't work based on logic. It works based on FOMO and moral hazard. So you need to be fully cognizant of that before you take any position, because at the end of the day, it doesn't really matter how much of a valid reason you have to complain for you losing money, because you're not a winner if you just have a very, very good reason to complain about what's happening in the markets. You're a winner if your trading account moves higher, and this is the only thing that's going to judge you as a trader at the end of the day. The rally might have come after the news broke on research of dexamethasone. Yeah, right. As we've seen 5 different rallies come following some type of an announcement for XYZ drugs, and then when XYZ drugs prove to be, at best case scenario, incrementally helpful, or some vaccines that are announced that they go through phase 1, which is just that they're not killing people, and then when in essence we get data that show that these medicines have probably no real effect in changing the whole situation with coronavirus. It's not that they're going to make it safer for people to contract coronavirus, or it's not that they're going to prevent them from getting coronavirus, the market couldn't care less. So we get the rally on the rumor, and then whenever that rumor gets shut down, the market doesn't even pull back like 5 handles. So yeah, that's what such a market does, right? I mean, any type of rumor, any type of news, no matter how insignificant it is, or no matter how outrageous it sounds like, it's going to be bought, and very few things are going to be sold as news or rumors. Which is exactly the behavior we were seeing also pre-coronavirus. I mean, think about it. Coronavirus was more than obvious that it's going to create an economic disruption, and the market until the 20th of February, which was more than obvious because the vast majority of the countries had started indicating that there is a huge problem, stock markets were hitting all-time highs. So, this type of a market creates the following situation. It goes up 9 out of 10 days, more or less, or it goes up or doesn't move down 9 out of 10 days. And then one day it has to price in, quite a few things, and it dumps lower. Which, of course, is not normal market behavior, but this is not a normal market. So let me go through some of your questions and see what you want to have a look at. Good morning, good morning, good morning, blah, blah, blah. Longest day, 21st of June, correct. Are most of the same page at most gaps, so 99% are filled? Years old, yeah, there are a lot of gaps that get filled after many years. There are also a lot of unfilled gaps that there's a very high chance that they're never going to get filled. So yeah, I mean, the general rule that, wait for a gap to be filled, statistically speaking, it applies, but you can't trade based on that because, yes, there are gaps that never get filled. Or they're going to get filled so much later, but that it doesn't really matter because if you were trading based on that, you will have gone bankrupt 1,000 times first before anything happens. So could it be said that one trillion stimulus is a week-long buy on S&P crazy times ahead? Yeah. Will Beijing now got the European strain? Yes. No surprise there. You actually seriously, much. Okay, gold getting scary up here. Yeah, scary. I wouldn't say so. Yeah, it might pull back from here. But as I said, I think it's scary to be short these metals at the moment. It's not that they can't move down, but they can substantially move higher. So be very careful. Okay, so more questions. Silver hand and shoulder in the daily. Let me see. So you say that on the daily chart we have a head and shoulders formation developing for silver. Yeah, I mean, an inclined one, you might say so, an inclined one. But I would be very, very careful for the reasons I said. In the short term, admittedly, it looks heavy. There's no question about it. But as I said, I don't want to be selling these metals. I just want to find, any decent pullback opportunity to buy. So, personally, I'm not looking to make, little on the downside here. I'm looking to make more on the upside. Euro, Aussie, and Aussie Yen, please. Yes, absolutely. So Aussie Yen, I already talked about it yesterday. I said that it was testing this channel trend line support. I also showed, I zoomed in to show that it was a confluence of supports because we also have this horizontal support area. And within that, you can see here in blue, the 200 daily moving average. So keep in mind that that was a triple confluence of supports that so far has done the trick. We've seen a rebound, but in order for this to have any decent follow through, we need stocks to start hitting all-time highs once again. And since I still believe there is a decent chance that we're going to see another leg to the downside, I would be very hesitant in buying. From a risk reward perspective, you can be long against this channel trend line support, and there's nobody that can actually blame you for that. I mean, there's nothing wrong with trading it that way. Probably it's a more right way to do, but I suck. I always have in the back of my mind a little bit of fundamental backdrop, probably a huge disadvantage in this market. Now, having to do with Eurozone, since you asked, I mentioned even yesterday that Eurozone has not managed, despite a nice rebound higher, Eurozone has not managed to break through this descending channel trend line resistance. And as long as that's the case, Eurozone remains in a downtrend, right? Now, we had seen already RSI divergences develop, which are still apply in this market, right? We have also seen that the downside momentum was waning for quite some time. But in order for me to turn really bullish this pair, I would at least want to see a break above 166, this area. Then and only then I would be looking for a stronger rebound, in which case I would be looking towards the 171 area. Okay. More or less, not exactly the same pattern, because here we have a channel that dates back to the high, because the high was a spike actually. Same situation with the Euro Kiwi. Euro Kiwi remains in a descending channel. So for me to start looking higher, I would want to see breakthrough 178.80 or whatever. At the very least, in the short term, I would want to see a break above 176.50. Steve, take a look at the dollar Swiss. Thanks. Yeah, absolutely. So here is the USD Swiss. There it is. So here's the USD Swiss. A few days ago, I indicated here that we might have, a rebound from there, which I think wouldn't easily take us above the 96.30 area. I think that we might have another extension higher. This was a beautiful. It isn't invalidated, by the way. Morning star formation. You can see it here. These three candlesticks, and so far, yesterday and today have been yesterday an inside day to that last candlestick, and today a short inside day to yesterday's inside day. So I still think that we can see another extension higher, perhaps to retest this 96.20, 96.30 area before moving lower. That is why I also believe that this Euro USD might not be done correcting lower. It might, because it's well bid, but on the other hand, my intuition tells me that we might have a little bit more to the downside, 111.50, or perhaps even a little bit lower than that before we can see a continuation higher. Okay, so that remains my main thesis here. Pound USD. So here's the pound. Now, having to do with the pound, once the head and shoulder scenario, shoulder scenario was invalidated because we never reached the target, the alternative interpretation was that this was a corrective channel, this blue one, right? So, it's not easy for me to turn bearish the pound, because what we've done so far is that we found resistance at this area, which was already indicated on my chart as a support resistance area. But look what we did following that. We retested this broken channel trend line resistance and support, and on a daily closing basis, at least, we held. So, that was a pivot area for me. I had already marked it on the chart, and it's still holding. So, I'm not going to be surprised if we do something like this, which is more or less the behavior expected from Euro USD. But on the other hand, as I just said, this channel is holding. So, let me say it otherwise. I wouldn't be easily shorting the cable. Okay, I would be trading other things. I'm not looking to trade the cable because I don't want to be buying it up here. But on the other hand, given this technical picture, I don't want to be selling it either. Hi guys, I like the way you analyze the market. However, I'm not exchanging any Forex. Do you refer any other group like you who work on stocks? Yeah, we don't work exclusively on stocks, although we would, on occasion analyze specific stocks as well. You know, it's not easy for us to endorse somebody else because, you know, we're not extremely familiar. I mean, it's, you know, it's very hard to endorse somebody that you're not very familiar with their work, right? I can tell you that we have considered many times to, you know, to also make a branch that's going to be involved in stocks at some point. It might happen. You know, if that happens, I endorse us. Zinc and aluminum, please. At last time you did not. Okay, give me tickers, please, because I'm not trading them frequently. Actually, I'm not trading them ever, not frequently. And I have checked them, you know, very few times on a chart, and I don't even remember the tickers. So you want me, Niraj, you want me to have a look at them? Just, you know, give me ticker that is valid on TradingView, and I'm going to be more than happy to have a look at them for you. What do you make of the euro pound? Yeah, thank you for reminding me, because I wanted to talk about the euro pound yesterday as well, and I completely omitted to do so. So what I have to say about the euro pound is do something else. Because what we've had in essence here is this move lower, consolidation, horizontal consolidation in a range. We broke out from this range to do what? Create another range. So, you know, we're again in a rectangle. Clearly, you know, breaking out from this rectangle will create some type of a, you know, volatility. So, you know, you want to do something, just buy or sell the breakout. So, you know, we break below 88.50, sell it. We get above this 90.20, buy it. Until then, nada. Now, you know, there is an alternative way to look at this. Let me draw it in another color. Let's make a few tests here. Let's see if this parallel line will create some type of a channel. Yeah, something like that, I guess. So, you know, there is also the way to look at it like this. You know, looking at it like this, the interpretation is bearish, right? Clearly bearish. Why? You know, sometimes the market is very simple to analyze, and it has to do with, you know, what is the most fundamental thing you want to do in a market is spot, you know, the path of least resistance. So, you know, just if you know, make a channel like this, then you have two things you have to compare, right? You need to compare the prior move lower, having to do with, you know, how steep it was and how much time it took. And you want to compare the move higher, you know, how steep it was and how much time it took. So, you know, comparing those two with each other, you know, tells me that probably the path of least resistance is lower. Now, you can combine the two ways of looking at this market, meaning rectangle, or alternatively channel. You can combine those two and make a trade out of them. And how can you combine them? Let me clear the drawings. You can combine them by saying, okay, if we assume that this channel is the valid one, but at the same time I have this rectangle, I'm not going to be jumping the gun and selling when we break through this channel. I'm actually going to be waiting for the market to break through this rectangle as well, in which case I'm going to be both below this ascending channel and the rectangle support. And then I'm going to be selling. So, you know, that's one way of looking at this market. Nifty and USD INR, sure. By the way, Niraj, I'm still waiting for tickers in TradingView. If you want me to have a look at zinc and aluminum, or aluminium, you know, depends on, I think aluminum is how the Americans call it, and aluminium, you know, Brits. Okay, so having to do with the Nifty, there it goes. So nothing has really changed in the outlook here for the Nifty. I think that this is still a corrective formation. So, you know, if you want to create a larger formation out of all this, mess. We can delete all that. We can pick a different color. There you go. So that's more or less, what I would expect from the Nifty to happen sooner or later. By later, I mean, that would be the later development. Okay. And having to do with USD INR. Still nothing has really changed here. Just keep monitoring this triangle. No. I think that it's very likely that we're going to first see a move higher before we can see a bigger correction. Okay, so that's my main case scenario. Dale, do we have a guess?
Yes, we do.
Perfect. So well timed, I think.
Okay. Nargis is with us, so I'm going to set you up, Nargis. Okay. Thank you,
pleasure.
Steve.
My pleasure.
Welcome back, Nargis. Asking to mute you.
Okay, she's
Hi.
unmuted. Hi.
There we go.
Good morning.
Hi, Nargis.
Hi, good morning, Dale. How are you?
Good. Welcome back.
Thank you. Thank you for having me back, actually.
Yeah, I'm very interested in looking at your charts. So
Yeah.
the green screen share box will
Yes.
give us your looks. Here we go.
You
Wow.
you can see, right?
Yeah, we have this megaphone formation. Interesting look. So take it away and tell us what you're seeing. And aren't these rallies, the recoveries in these markets just amazing from what happens, how the market sentiment can shift in 3 days?
Yeah. So that's what actually I was looking at the chart weekly, basically a little bit higher
Yes.
time frame because it's a little bit more cleaner than the daily.
Yeah.
And I was seeing here, see this January we had, right?
Yeah.
This whole run from this straight line, and then we got a pullback here, and that was like, okay, the world is ending.
Yeah.
But yeah, so we got this pushback, pull down, and then it was a little bit gradual run, and kind of a new high it made. And then we had the December pullback, which was a little bit more sharper and below and lower than this, basically.
Yeah.
And then we had another recovery, V-shaped recovery, which was a little bit sharper than this one. Then we had a new high, and this fall was much sharper and lower than this.
Yeah.
And we had a V recovery, which is this V is much sharper than this V.
Yeah.
So every time we are falling down much sharper and making lower, and then recovering that fast with a more sharper V than the previous one.
That's
so
a
the V
great
is getting
observation.
V
Yeah.
is getting narrower. So looking at this pattern from the past 3 or 4 times, maybe who knows, this goes like this, and then like this.
Yeah.
So that is one anticipation we can look for if this all-time high is taken out. That could be a possible scenario in the future. If the extensions are to be taken into account, somewhere around 3700, 3500 to 3700s, somewhere in early next year, or first half of the next year. If we do get to all-time high around those extensions above this, then who knows, we may get to 1800, 1500, or 1200, depending on where we are, if this if this megaphone is still true, you know.
Okay. All right. So, nice observation, beautiful formation. So, your blue line was also a megaphone until it
Yeah.
cut through it. I was using that line.
Yes.
I believe it was 3190 or something. And once we fell back in it, we crashed. So we're back inside the blue one. What would give you confirmation that this is a failing rally? And we're not going to go to new highs? What would the market have to print for?
I think,
go ahead.
In my opinion, currently we are this yes, around below 2785, around, which will bring it down below the cloud, back again in this area here, closing down here on a weekly basis. We would say, okay, this possibility is a little bit more than this possibility.
Yeah, and that would be the first time that we did not make a higher high in this formation.
Yeah, so it could be an, something like this. Oops, something like this, like an H pattern coming down, or N or something.
Or even just pull back maybe halfway before it makes the launch for the upper megaphone line.
Yes, so somewhere, I was hoping that it would at least this time, but it's a fantasy to come down to at least 50%, or if not here, or at least to 2785 here. But it only did 236. That's like
right,
hardly anything. But then also we had like a world-ending thing past 2 days. People get spooked so fast, like but nobody gets spooked when all this is happening. So I guess the sharp rallies causes, or maybe the also causes the downwards as sharp as the move up. So it shouldn't surprise as such, after seeing all this, that something like that can happen. Mentally, we should be prepared now to see such severe moves up or down, both sides.
Yeah, so this is one of the most difficult patterns to trade. It's also, besides a megaphone, called a broadening top, not a broadening bottom, but a broadening top formation, which implies, it's a topping formation. It's just, you never know when you're not going to get that recovery. And we've taken out the top line, the blue line.
Yeah.
Maybe one day, hopefully not, we have a throw under that lower red line.
Yeah.
Okay, so what else is on the radar?
So the way I was looking at it is, we went down, we made a high, we made a low here, sorry, 2174. So my number for a cycle was 2209. We undercut a little bit, which generally happens. Either it undercuts or overcuts by approximately 25% within the value. So here 3365 was my number to turn back. Last time when we talked, I think it was just before a week, the action started happening.
Okay.
This was from the last time we had discussed. So to 3365, and it was approximately here. And from there, I was expecting a cycle turn, and I was expecting somewhere around 3125 to where we are right now, 3137 or 3025. But it happened much faster and much sharper and far much below than that. So one of the observation which I have noticed is that the markets, or I very closely track ES, is that it does 2 or 3 cycles at a time without stopping.
Okay.
So this is so it did 3365 and fell here right on the megaphone line, which does the 10 cycles. So without stopping, it did the 10 cycle, and from here to here, 3249, which I was tracking, it also did the 10 cycle, and we did get a reaction here, even though much smaller as compared to this move in terms of a retracement. but nonetheless, we did get a reaction.
Are you
So
tempted to short this market back at the broken trend line? I mean, we may be a shade above it right now, but
yes, I shorted right at 30, 32 20s.
mhm,
Because as I was saying, it generally undercuts or overcuts within 25% of that number. I don't know how these, I don't know, algos or whoever they are design it, but they keep a little bit of element of surprise. So I was watching this area very, very closely. If it hit 30 to 49 properly, then yes, that would be a short. But I started building some short positions around this and exited some longs, and shorted Apple, shorted what was that, Nvidia,
how
I mean
about like
XP.
how about with today's action? What do? Nothing?
Today's action, I had a, generally with these sharp moves, I'm mostly dealing with the XPX credit spreads. So I had
Okay.
some put spreads, which I think are worthless now. So I'll just exit that and see if, if it tries to turn around 31.45, 31.65 just for a pullback. I may short that, and either via a credit spread or just maybe just via ES future to pull back down some,
Okay.
basically just returning to the mean on a smaller time frame, and then we
Okay.
see. But if the
Okay.
day closes above this line, this blue line, 10 SMA,
Yeah.
then we definitely going a little bit more higher, at
Yeah.
least up till here, and then we see whether it has any more interest to shoot up and go further than that.
Yeah, I know some people were looking for 3260. I don't think you have a number there. I do have a question from our viewers. How does Nargis calculate her cycles?
This is GAN.
Okay.
I've been studying GAN, still a student of it. So mostly I'm doing price cycles on it. Time I'm still studying, because the current times which we are in, the sharper moves are kind of. At least me personally, since maybe I haven't gone to that level as other people who may have studied time for a longer time, uh,
Hmm.
it it's still a little bit of a tricky thing to say whether the time is the turning time is here or here, because of these very, very sharp, the FOMO is a lot there. So
Hmm.
I don't know, the higher cycle takes over, and the actual time which we are seeing, it doesn't work, or it's not working at the time it's supposed to work. Let's put it that way.
I do you have a spider chart? I'm wondering, and
Yes.
because
Yeah.
it did leave that island. See that island right there? Okay,
Yes.
so
Here.
we don't
This one.
know, based upon, because they're not open yet, if they're going to fill that gap or not. That's going to be a pretty key test. So the market could get into the gap. If it doesn't fill it, it's still a pretty rare formation.
Yes. This. So we may be having a double island here. This got it down, and now this we will be gapping right into the gap,
oh my
somewhere
God.
around 316. Yeah. So this is
Oh, to
just at the
fill it
lower.
won't fill it though. It fills it at 18,
Probably
right?
yes. If it is an island, then probably it may not fill it,
Yeah.
or at least it may not come down and fill this downside right away.
Okay. All right. So
So
we're going to see if the S&Ps are an island or it was just, peninsula. So something else that since you study GAN, I'm curious, and then we'll go to this chart. The low of the move from the February break, did you notice was on the first day of spring?
which chart you were saying,
Right here, the
SPY or?
S&Ps, yeah,
Oh, okay.
any of them, they all bottomed the
Oh,
same time
yeah,
in
they all
March.
actually, yes. Yeah.
See that
Yes.
in
So,
March?
yes. So March,
The low,
uh,
the
this
low of the
is,
move.
yes. So as you say, those 4 seasons which we have,
Yeah,
the equinox and the solstice.
coming up.
So
Yeah.
in late December, I had tweeted, okay, the energy would be coming in because we'll be shifting the seasons.
Yeah.
And March again we got it, and March, April, May, June now, right? Again.
Yeah.
So
Solstice next in
so
5 days. So
next in 5 days, yes.
my thesis, or guess, is we bottomed on March 23rd, which was the equinox, and that this rally has lasted through the spring.
Spring, yes.
And let's see what happens with summer. If we have a long, hot summer, we'll see what happens to the market there. So I was wondering if you had any credence. You've read about Gann saying that cycles are important. Sometimes the seasons could provide turning points.
Yes, definitely a turning point, at least right now, to at least give a reaction.
Okay.
Doesn't matter how strong or shallow reaction we may get, but a reaction nonetheless. So like here at 10th cycle, when it completed it, and 10th cycle have been proving a little bit more powerful, especially on ES and in NQ as well, because NQ 10,000,
Yeah.
right there we got a big reaction, and I was waiting for that. So a reaction nonetheless. So here we got, let's just assume that suppose this is a shallow reaction and this does takes the high out. So 32.49 is the 10th cycle, and let's say give it a little bit of 50% to say, if it wants to overshoot. So 32.49, so 32, little bit under 3300, 3307, I think so.
Okay.
Why to guess? I have written it down here.
Okay. You're a hardworking technical person, Nargis.
Yeah. So
You do
see,
a lot of work.
yeah. So 32.49 to 3307, the upper level of the bull trap number. Let's say that.
Okay.
And if it starts trading above here, then we say that this thing is going to 20 cycles, and that may bring us somewhere to 3700 to 4K.
Okay.
Based on the numbers. So
that's what a lot of the bulls are looking for.
Yeah, so that may prove this theory of hitting that upper trend line one more time, and then who knows? This may still be true. This may still become true if it follows this pattern from the past.
Okay.
So because remember when 2200 happened somewhere here, what I was looking for was we tested until here, right? The breakout of this area. And from right here, we bounced back, and now we are all in good territory, and the monthly chart is all good. And this thing, we never traded below the cloud here. But if that megaphone works out the way it has worked out in the past, then who knows? Next time it may, this low will be taken out, and we may land here or here. This is the area which was never tested. It never came down to test this. So this is one big thing which may take us down to, oh my God, 1500s somewhere, 1500s, NQ in 5000s, or Dow also similar number.
Yeah, those were important tops. Those, the 2000.com and the 2008 financial crisis. That 1500.
So somewhere 5000 and YM similar. All these, So I mean, that's just a theory until it works out, but yeah, something like that.
Okay. All right.
I was just I'm like closely tracking that megaphone, how it works out. So that 32.49, 3307 area would be a little bit. Those are the things I'll be watching for, what the markets wants to do in terms of turning down or turning up.
Okay, and we're halfway through the month of June, looking at your monthly chart here. So a candle, you don't know what kind of candle you're going to have until it closes, and that'll be month's end.
Yes. So here, see, we did have a sharp recovery, and this was the deciding point. Just if you're just plainly looking at the monthly 10 SMA, this month of May closed above this 10 SMA, and June had a big rush because I was looking for, since I think I tweeted about it also, that okay, we had the month of May close above 10 SMA, so expect higher. and that's when it confirmed for me that this would go to 3249 area, complete the 10 cycle, and also this also completed, I think, 80% or 82% of the extension. That also brings it to 3250 area here, and that matches with the cycle number as well. So kind of a little bit of confluence in terms of numbers, and we it, you know, just a little bit below that 32 31 it turned down. It tested this 10 SMA. I mean, today we are up, but if you'd seen it yesterday, it was just touching this line. 20, it went a little bit lower as well, 29, and then it came back up. On weekly also, it did the test. So, come on. Yeah, it tested the 10 SMA.
Okay.
And then back up. Now it's all above here. If we close, if the week closes here, then actually there is, at least there is no reason to say that we'll get a sharp pullback right away. But you know, that's still possible.
Under this week's lows, there's problems. So
yeah.
right.
So under this week's low, it would be a problem, and above these highs, it'll be okay.
Yeah.
So we'll watch this candle, how it does on probably next week or so, and with respect to this candle, how it does.
Okay. So are you working with a group of people? You still mentoring or collaborating? Tell us what you're doing besides trading your own account.
So, you know, I get a lot of requests that, you know, how this is working, that is working. So I had, you know, so I said, okay, as I, you know, this is a lonely business as well, you know, trading all alone. So I had started a Discord channel, and some folks who were interested joined. So we discuss whatever I tweet. We discuss a little bit more detail on that. You know, what's happening, why it is there. I put out my trades, what I take. Any people who have their setups, they ask, you know, what do you think this will do, or you know, what do you think this stock will do, or something like that. And then you know, it's a little bit. You know, some people have, they were very, very new or didn't know technical analysis. They've learned a little bit more. So I personally feel happy that, you know, the other folks are also benefiting out of this information. And I also get to learn something, you know, to look at things from a different perspective. Or sometimes I'm like, you know, I'm just doing my things and I don't know what's happening in the market, or which stock is, you know, running very hard, or this or that. I get to know or hear about it too. So, you know, sometimes
it's like having a mastermind when you're collaborating with people.
Yeah. So it benefits all. So again, it is all, right now I haven't thought about anything else. Everyone keeps asking me, are you going to run a service or no? So I'm a little bit still skeptical about running a service or anything. But yeah, it's my all information as of now is all free. Whatever I do, it's all like, you know, just collaborating or sharing what I do. That's all.
Okay. And the best way for people to reach out to you would be with Nargis 007 Secret Agent Woman?
Yes, right here. Yeah, yes.
Okay.
Right here.
Nargis 007 is how you reach Nargis, and this woman knows how to use a telescope. That's all I could say. So really appreciate you being here today. Did you want to wrap it with anything?
The only thing I would like to say is that since I'm watching the markets closely to see whether we shoot up here or this would be a turning point here. So if we shoot up here, then the other major stocks have presented themselves with much higher targets as well. You know, we talked about Apple last time.
Yeah.
So 325 to 350 was, you know, I was looking for a turn down, and it did.
Yeah.
Apple did you know, we had a nice flush. But if, you know, if Apple maintains the price above these levels, I expect it to go to 500s at least. Based on the cycle pricing. Tesla also, remember Tesla, you had mentioned, like, so now it did take out the 993, and if it maintains the price above this, we have into 1300s. Amazon is somewhere like, you know, at a conjunction. It is
Oh, yeah.
it's at a
Yeah.
conjunction 2705. So I think somebody asked me on Twitter, what do you think about this? And it said this, and right there it had turned down, and it did flush flush nicely, approximately 200 points from there. So again, either it will do 4,000 or 4,100, or down to these levels. So
Okay.
this is.
And you have a bearish call out on Netflix, which has been underperforming.
Yes, so this number has been, I've noticed this area, lot of stocks struggle here, BA literally fell through the roof from here, and it hasn't recovered yet
Okay.
from there. Quite a few, even Tesla struggled a lot in this area. Now Netflix is struggling. It goes up till here, 337, 441, 445, then pushes down. But if it goes above here and maintains above here, then we have targets into 700s.
Okay.
So
All right.
yeah.
Go ahead.
Yeah, so that's all I was saying is, if this wants to be on the upper side of on this upper area, then all this may still work out.
Okay. Mr. Buttons is a big fan of yours, he just said. Do you know
really?
Mr. Buttons?
Oh, Mr. Buttons, yes. He
Yeah.
is also, I think came into my Discord room. Yeah, I mean,
Okay.
and yes, so apparently.
He's married to Mrs. Zipper.
Oh,
Mr.
okay.
Buttons and Mrs. Zipper.
Oh,
So,
yeah. I get you
anyway,
now. Okay.
Anyway, Nargis, great to see your work. You have an affinity towards it, so I'm sure you're helping other people. And thanks again for bringing your numbers and some important technical levels for us all to pay attention to.
Thank you,
Appreciate
Dale.
it.
Always a pleasure talking to you, and thanks for having me. Have a great day, and hopefully all of us, recover nicely from this COVID-19, safe,
Yeah.
healthy, with our jobs all intact, the economy all good. That's all we pray for. I mean, markets are there; they'll be here. But the
Right.
mental health and the stress levels,
Yeah.
we should all come out as a winner out of all this.
A great way to end this interview on with hope.
Yes.
And thank you. I'm hopeful you'll return next time I invite you. And thank you, my trading warrior sister, for edifying our community today. Thank you.
Thank you, Dale, and have a nice day.
Okay. Thank you. That's Nargis, everyone. Don't forget to count. Don't just count your pips, count your blessings, and we'll see everyone tomorrow. Adios. You're very welcome. Thanks again, Nargis, and see everyone tomorrow.